Good evening, all. Ira Epstein with your financial market update, and this update is for Monday, the 9th of June, 2025, about 6:25 in the afternoon p.m. Central Time. So as we take a look at all these markets and what's going on, let's first look for tomorrow what the news of the day is going to be. National Federation of Independent Businesses, they're going to release their Optimism Index, and that comes out at 5 in the morning Central Time. Redbook Group will come out with their weekly retail sales at 7:55 a.m. Central Time. They've been running 4.5% to 6% increases each week. U.S. Trade Representative Jameson Greer, well, he's expected to talk at the Economic Club in New York at 11. He may not make that. You got to figure out what time is that compared to England, all right? So that's about, England's ahead of the U.S., so where does that put you? And we've got day 2 of a meeting taking place in London. So I don't know that he's going to make that meeting or not. That would be, if you add from the Chicago time, I said Central, so that's going to make it about 4 in the afternoon. What if that meeting is running? Because they're going to have their day 2 start at 10 in the morning. They'll take a lunch break if it doesn't end by noon. Then they'll come back. He may not make that meeting. We'll talk more about that. The API is going to release their weekly member stockpiles at 3:30. Remember, on Wednesday morning, you'll get the EIA numbers at 9:30 in the morning. So the day was interesting as can be because we had started off where Kevin Hessett went on TV this morning, and he was saying that, yes, he's widely expected to see there'll be movement on rare earths coming to the United States, and the U.S. will make movement on certain AI chips, not all of them. Ones that the president has approved can go there, maybe some software. And he thought the meeting would last a couple of hours with a firm handshake. That's his word. Well, I think that the fact that it went today over 6 hours and it's scheduled for tomorrow, I think the handshake's over. It might be a bear hug between them. And it could be more than just that simple part. That's what we want. What we don't want to see is the two sides walk away and they couldn't resolve the issues. Why would they need another day for that? It doesn't make sense. So I think there's more on the table, not less on the table, but you just never know. So what do you do with all that? Well, it's one of the things I think the stock market's looking at. The stock market is saying, these issues are going to get resolved. There's no reality to the factor of the July 4th through the 9th for the next round of tariffs where you're going to get more deals wrapped up and put away. It just isn't happening. I hope they can finish the meeting with the UK and get that one on the paper, but I have my doubts. Remember, Japan wanted to have before the G7 meeting that is coming up in Canada. They wanted to have their deal done. I haven't heard a word about that. Mexico hasn't done anything with the U.S. Canada's talking apparently to President Trump, but he's not the end deal maker. It's got to go through everybody else on the team, and we'll see what happens there. In other words, the time crunch doesn't make sense. And the fact that the president asked everybody a week ago Wednesday, this past Wednesday, to give them their best offer tells me that they're going to have to pick, choose, and decide numbers. Just, it's not random, with a lot more thought, but they're going to do that. Could they just give a blanket extension? They could. But I think the president wants to make sure that he's getting everybody and that their number fits in with what he wants. And if they gave him their best numbers for this and they're far off, I don't think he'd give them the same number that he's giving everybody. So that's what I'm looking for. Do I know what I'm talking about? Probably not. It's just a guess, but trying to get into the man's mind's not easy. In the dollar index, you can see you're down a bit. Most currencies, they were up today against the dollar. Let's see what they do. So as we come to the S&P, there's no getting away from the fact that the market has climbed the wall of worry. It has not gotten on a closing basis over the highs, but it certainly has thrown everything at it, and it just doesn't break. Markets that don't break tend to go higher. I don't know what else to say about that. You can see the labored move, and it's not at all-time highs. That comes in on this blue line, and you can see the value right here, 62.36. So that's 200 122 points away. Okay, doesn't mean it can't go there, and that's not what I'm saying, so don't put words in my mouth. The trend is up via higher lows, higher highs. The market is overall the key moving averages, which means the resistance has got to be the Bollinger Band, and you can see for 2-3 days now, that is what the market is fighting against. And it's in a narrow band. If it breaks out, this all becomes energy to attack that all-time high, if it's a breakout to the upside. If something bad happens and the market comes out under 58.18, you've got another correction coming, and then people will say, do you think that's going to challenge the April 7th lows? I don't know, but that's what they'd say. I'd look at this whole area of support on pullbacks, and in the momentum of the slow stochastic, you're starting to embed now. Embedded gets me more bullish, not bearish. So if you're embedding, I expect to see buying on the pullback until the red line closes underneath 79. When we come to the NASDAQ, you're doing the same thing. So now I'm looking at the 18-day average as major support until the red line closes under 79. The Bollinger Band's the target. You can see you keep going to it. You keep running into a problem there. The all-time high is 2269.50. We're not that far away from it, 800 points. And in these markets, that happens in fair order. You're not embedded in the Dow. It is just an overbought market that's run into the Bollinger Band, gets thrown back. It is not over. The bullish setup's not completely right. You should have, instead of the way it is with the 200-day average, and underneath it the 100, and underneath that the 18, it should be the other way. The 18 should be over the 100 over the 200 to say it's a real bull in terms of moving averages. That's where I'm at, and that's what I respect. In the Russell, overbought, coming up. Now this is that rotation. As long as the markets don't break and as interest rates don't go higher, people are rolling into the Russell saying, well, the next move's got to carry it, so on and so forth. As I said before, I understand the thinking, but I don't understand the investment. Can't be clearer on that. In the DAX, notice how you're backing off. And again, each time you've hit the Bollinger Band, you have backed off. The difference this time is you have lost the bullish reading. Let me show you. This was the market finish on Friday. This is today. So now you're under 79. Unless the market goes right on up and over this 45.22, and I don't expect that. I think it will come back to the 18-day average and try to find its footing there. But now it's got to work off an overbought condition. The only time you can re-embed once you lose it is the very next day, which will be when the market reopens. In the September T-bonds, look at how the market's just drifting sideways. Look at how the slow stochastics are sideways. This means something's going to happen. The longer it can do this and keep this narrow band, this is building energy for whatever that next move is. Same thing in the 5-year note. There's no way to argue that that isn't taking place there. Then we get to the dollar index, which is oversold. So oversold often leads to bear market rally, all right, because of what it is. Why do I say bear market? Because you're underneath the 18-day average. So my bias is down, which means that any rally is a rally in a market that has bearish bias. I'll call that a bear market rally. So 99.60 is that target. It's a dangerous market now to be short. In the euro, you lost the bullish reading. It's a dangerous market to now be long at these prices. Could pull back for bigger support at the 18-day average. In the British pound, you flirted, and let me just show you that. I watched it this morning as to where it was at, and this market had to close on a firm note in order to keep its embedded reading. As you can see, it's down 8 points and it's losing it. If it loses it and it stays lost, I can make an argument for it to go back to the 18-day average to regroup. So all these markets are waiting to see, but I don't know what they're waiting to see. Let's assume China and the U.S. do a deal. Is that bullish or bearish for the dollar on the big screen? And what about the other currencies, because then they'll look that they can do things with China too. So it's very interesting. It's very confusing. You're in the midst of that right now, and the charts are telling you you're in the midst of that. In Bitcoin, I felt that when you hit the Bollinger Band for the first time in my morning subscriber video, I said, I don't think the shorts are there anymore. I think they're gone. I think the next move would be to the 18-day average. Well, it went through that today. It might be going to the upper Bollinger Band. And what is it doing? See this sideways tight action? It's winding itself up for its next move. I happen to think its next move will carry it to new all-time highs. In Brent, well, why would energy go up? Because if China can make a deal, get what it needs to expand its economy, stop the trade war with the U.S. while it's expanded other markets. If you get my full newsletter tonight, I included charts of how the U.S. exports from China to the United States has fallen in May, because those are the figures they just released. And I show you how they've picked up on abroad. Now, if they can reduce some of this tariff business and get back to doing business in the U.S. and keep that market share, well, they're going to need a lot more of everything. So that's one of the things I'm thinking. WTI doesn't act like it wants to be bearish anymore in the U.S. The markets are starting to see certain markets, be it metal markets, be it energies, moving out to the upside, saying specifically, industry's going to get better. Silver's on a tear to the upside, platinum, copper, they're all moving versus the dollar right now and versus the gold market. They're catching up. They're in a catch-up move. Doesn't mean they'll catch up, but you understand what I'm saying, I hope. Gasoline, back into the bull mode. So now the support should be the 18-day average. You don't want to see the market under 202.49. That risk is insane. I mean, it's a $3,000 a contract risk. It's nice to talk it, but would I have you risk it? I doubt. I can tell you no. The resistance, if it keeps rallying, I look for the upper Bollinger Band to those two moving averages. And in that gas, this was the play over the weekend. What was the weather going to be? And as you can see, the weather absolutely reversed course, and you can see now you're back to nothing. You have a higher high, lower low, and the market's waiting to see when is that hot spell. Are we going to have one of these summers where we never get hot in the Midwest, the East Coast? It's possible. The Great Plains, the Dakotas, there's other areas that are very hot. I just talked to my buddies in Phoenix. They told me it's unbearable, of course, at this time of the year. So that's what you end up getting. But that's Phoenix, Texas. Those are areas that are always hot. But not the swath of Iowa, Nebraska, Illinois, Indiana. I don't know if I said that. It hasn't been. It's been absolutely a dream summer so far. Your highs are near 80s, mostly 70s. You don't need a lot of air conditioning. Nighttime, you can turn it off because you're dropping into the 50s. So you build that nat gas. That's the problem, and I think we'll see that when we see on Thursday another nat gas build in the market until the heat shows up. So once again, I hope you take advantage of seeing my silver report. I'd like it to be as accurate as the last nat gas report was, the dollar index bearishness, and the S&P bullishness that we had last reports. I think we've done okay. So I hope it can join the family. We'll find out. IraEpstein.com, go there, and I'll catch up with you all in the other videos tonight or first thing in the morning. Take care.